Joining us now is Tony Dwyer, Canaccord Genuity Chief Market Strategist, and Jeff Sherman, DoubleLine Capital Deputy Chief Investment Officer. We've got bonds and stocks covered for you in this segment. Tony, first to you, because, you know, as you said it in your note, it never feels, everybody calls for a healthy and normal correction, and it never feels that way when you're going through it. So the NASDAQ is now off, what, 5.25% from the highs. Is it healthy and normal?
I think it is, and some of the evidence of that is, I think Jim covered it earlier in the show, Jim Paulson, where this is actually kind of an offensive tape on a relative performance basis. The market is really, Sarah, I think it's so important to define, quote unquote, the market. If you're defining the market as the S&P 500, it's really been driven by the mega cap theme throughout the summer, and everything else was suffering. You can use the McClellan Summation Index, you can use the NYSE Advanced Decline Line, the NASDAQ Advanced Decline Line, the Russell 2000, the mid cap. So in other words, it really has been a broad, I don't want to say even pullback, consolidation, correction period. And now the mega cap stocks are catching up to that theme. Remember, the S&P was down about 5% a week ago into that Monday move. We're nowhere near having the same number of stocks pulling back to the same degree as last Monday. Last Monday, we only had, I think at the close, it was only 8% of stocks in the S&P 500 were above their 10-day moving average. The reading before I came on the show was in the 30s. So, you know, I don't want to drone on too much, but I think the broader market is actually acting better than it did last week, even with such a bad day.
And better than certain sectors like utilities and materials and real estate and communication services, all down 5 to 8% from the highs. Jeff, want to get to you on this big bond move. What is it telling you? Is this Fed driven? Is the debt ceiling in there? How are you interpreting it?
Yeah, I'm not thinking too much about the debt ceiling, although that's on people's minds over the next couple of days. I still think this is Fed related. I mean, Jay Powell last week, as I said on the show on Friday, he let the cat out of the bag, and he said that, you know, we've essentially achieved our inflation targets. And you look at something like the housing data come out today, you have a 20% year-over-year increase in the Case-Shiller home indices today. And so what you're seeing is just signs of inflation in really every capacity. And one thing that you haven't seen in the inflation data is the contribution from the housing component. And it's still running at very low levels, and that's something we think trickles into the system next year.